Welcome to all of you to today's SUERF BAFFI Bocconi lecture. We are very pleased that Hans-Joachim Kloeckers and Peter McQuade from the ECB, Sylvie Goulard from the Banque de France, and Barry Eichengreen from the University of California, Berkeley, have joined us today. Marco Buti from the EU Commission will moderate the meeting.
Thank you very much, Ernest. So the international role of the euro and the impact that the COVID crisis could have on that. I mean, let me offer a few introductory remarks, a bit in a sparse way. I mean, I have to say, on a personal basis, also having gone through the financial crisis, I often, when interpreting this or trying to understand what is going on, I tend to refer to what happened in the post-2008-2009 crisis. Now, during the financial crisis, I mean, many people saw the euro as almost doomed. We went through an existential crisis, which was a major one. I am, on a personal basis, actually take a bit of a contrarian view on the role of the euro during the financial crisis. I was actually surprised by how well it kept up as the second international currency in the world, and in spite of the fact that Europe was under huge stress at the time. Now, if you jump to then to today, I mean, one consideration is that in periods of stress and uncertainty, there is a natural safe haven effect. So the incumbent tends to benefit. I mean, an example here, again, going back to the financial crisis, was, and many of you may remember it, when Standard & Poor's downgraded in 2011 the U.S. Treasury bonds, actually the dollar appreciated. There was a pouring in of capital into the U.S. markets instead of the opposite. So the greater uncertainty in the overall situation, which heightened by the move by the rating agencies, actually benefited the dollar, not the opposite. So in a natural way, the incumbent tends to benefit from in periods of uncertainty. Now, is it going to be the case also in the present juncture? I think here the policy reactions are going to play an important role. I mean, there has been a swift, compared to the financial crisis, a swift policy response by member states in Europe in the COVID crisis. I think there will be increasing the supply of safe assets, provided that the proposals of the Commission will go through with the next generation EU and the recovery resilience facility. The proposal of the Commission, as you know, is to go and borrow in the markets, so issuing bonds, so common bonds by 750 billion, which, if you add it to what has been already decided by the Eurogroup, which is the 100 billion for the so-called SURE project, so 850 overall, this is basically 10 times as much as has been issued in euro-denominated bonds by ESM, EIB, KfW, and other institutions. So the increase in the supply of euro-denominated bonds is going to be a very, very, very sizable one. We have an element which is very important also, is to what extent the current political convergence, which is stronger than during the financial crisis, on a common response will be able to translate in terms of relaunching the process on the banking union, the capital market union. When the Commission put forward 2 years ago now a communication relaunching the debate on the international role of the euro, what we said very clearly at the time, so you cannot promote the role of the international role of the euro via gadgets or via gimmick. I mean, you have to complete economic and monetary union. That is the most important element, create a liquid market. So that is what I think we need to do now. It will be very important to see that this is something that will come out of as part of the response to the crisis, and showing also more political cohesion is absolutely essential to give confidence to the markets and to investors in the euro and boost its relevance. I don't have to elaborate on the geopolitical issues. I think is in the current period where also compared to the financial crisis, the international governance is much more fragmented. I think the weaponization of currency and currencies is going to be a relevant issue. Europe will continue to come from Venus, clearly, but nonetheless, we can certainly use our tools for a more, let's say, assertive role in global governance. We are lucky to have the Hans-Joachim Kloeckers and Peter McQuade, who are going to present the just released report of the ECB on the international role of the euro. Then we will follow with, as Anna said, with Sylvie and with Barry, and then we open the floor for question and answers. Hans-Joachim, the floor is yours.
Thank you very much, Marco, and thanks to Ernest for the kind invitation. So I will present today, together with Peter, the main conclusions from the update of our report on the international role of the euro, which we issued last week. But we will also show some material on the determinants of the euro and on the policy issues to which Marco already alluded to. Peter has been the main author of this year's report. He's participating from Dublin. Should highlight the disclaimer at the bottom. I mean, these are our views and they should not be attributed to the ECB. So looking at the outline of our presentation, it's straightforward. We start with the developments, talk a bit about determinants, policies, monetary policy considerations, and then end with some conclusions also on the role of COVID. This is just for warming up the standard slide giving the overview of the role of the euro in 5 different categories: foreign exchange reserves, international debt, international loans, foreign exchange turnover, payment. You see clearly the euro, which is in yellow, is everywhere the number 2, but it's clearly everywhere far behind the US dollar, and it's also far ahead of the yen and the renminbi. And when you look at the chart over time, you see here an index which we compose out of 6 components. I think banks, loans, deposits, foreign exchange turnover, reserves, and foreign exchange regimes. And we have a constant and current exchange rates to cross-check it. But you see a common pattern. I mean, the euro had a great start after '99, but a strong decline, particularly after 2008. And you see that more recently here, after 2016, there was a bit of bottoming out from the historical low. It is clear, and I mean, Marco mentioned it as well, I mean, the euro area sovereign debt crisis is probably the main reason why the euro lost attractiveness after the global financial crisis. It raised concerns about the euro's future, the sustainability of the euro area in general. But there are also some other factors which have played a role in the last couple of years. One is we have seen on the side of investors increased diversification of portfolios towards other currencies, so like the Australian dollar, the Canadian dollar, or the renminbi, and that went away both from euro and dollar. And of course, the relatively low interest rates lowered the attractiveness of investments in euro-denominated securities. And at the same time, on the financing side, we have seen a rising share of debt issuance by emerging markets, and they are traditionally more dollar-oriented, which led to a fall in the euro share. And we had often tensions so that we had relatively high currency swap costs, which reduced the attractiveness of the euro as a funded currency for acquiring dollars. That's a big picture. Now I hand over to Peter to give you an overview of what we have in the report which we just issued last week.
Yeah, so let me briefly show you some highlights from our new report. As usual, the report provides statistical information on the main indicators of the euro's international status. So it's important to note that the report covers developments in 2019. So although the foreword of the President contains some policy messages on the implications of the pandemic, this means that the report itself doesn't cover the period of the COVID-19 outbreak. The reason is just that the series used in the report come out with a substantial lag, so the data covering the period of the pandemic weren't available in time for the cutoff date of April 21st. On the first slide, you can see that the share of the euro in global official holdings of foreign exchange reserves continued to increase modestly in 2019. At constant exchange rates, the share of the euro in globally disclosed holdings of foreign exchange reserves rose by 0.2 percentage points between the end of 2018 and the fourth quarter of 2019. So that's the second consecutive year of increase. But the US dollar remained the leading global reserve currency in the review period, although its share in globally disclosed reserves declined by almost a full percentage point to 60.9%, a two-decade low when measured at constant exchange rates. The share of other currencies, so that's the red line, continued to increase in the review period, pointing to a growing diversification of global reserve portfolios. So in 2019, that increase was actually primarily due to the Japanese yen, the share of which rose by 0.4 percentage points, and that's actually it rose to a nearly two-decade high. The share of the Chinese renminbi continued to increase, but actually more gradually than we've seen in previous years. If we go to the next chart on FX turnover, this chart shows data from the BIS for 2019, taken from its triennial survey of trends in FX markets. So the euro remained the second most actively traded currency, with its share increasing by about 1 percentage point to about 32% in April 2019, which is when the survey is conducted. But the US dollar remained by far the leading currency in foreign exchange markets, and it's involved in almost 90% of all transactions. In the next slide on debt, the share of the euro in the stock of international debt securities declined by 0.3 percentage points in 2019, standing at about 22% at constant exchange rates. The share of the US dollar increased by half a percentage point in the review period, continuing the trend rise seen since the global financial crisis. As you may know, borrowers, including in emerging markets, piled up dollar debt in recent years to take advantage of historically very low interest rates. And the appreciation of the dollar at the height of the pandemic actually led to concerns that these debts could create significant financial stability risks immediately or down the line. In contrast, the share of the euro has declined by almost 9 percentage points over the same period, so since the global financial crisis. Looking now at loans and deposits, at constant exchange rates, the share of the euro in outstanding international loans increased by over 1 percentage point in 2019. That actually represents a reversal of the decline observed between 2006 and 2014. The deleveraging by euro banks no longer seems to act as a drag on the role of the euro in international loan markets. But nevertheless, the US dollar remains the leading currency in the market by a large margin. From the right-hand chart, you can see that the share of the euro in outstanding international deposits remained stable in 2019, like that of the dollar. In the next chart, we look at trade invoicing. So the share of the euro as an invoicing or settlement currency for extra-euro area goods transactions remained unchanged in 2019, as in recent years, while it declined marginally in the case of transactions and services. So about 50 or 60% of extra-euro area trade is invoiced in euro, be it in goods or services. Next, I want to look at the use of euro cash outside the euro area. The stock of euro banknotes shipped to destinations outside the euro area remained broadly stable in 2019. So that suggests that, despite all the talk about fintech and digitalization of payments, foreign demand for euro area or for euro cash outside the euro area remained quite resilient, much as it has actually within the euro area, at least so far. But whether that continues in the future remains to be seen. On the next slide, just before I hand back to Hans-Joachim, I'd like to mention a box on the role of the euro in global green bond markets, which was drafted by Elena Boneva and Fabio Tamburini at the ECB. So this is the first time we cover this topic in our report. A green bond is a type of fixed income security, the proceeds of which are earmarked to finance investments with an environmental benefit. So the left-hand chart shows that the EU is actually the largest issuer of green bonds. In 2019, more than half of global issuance was concentrated in the EU, and almost half of global green bond issuance was denominated in euro. The chart on the right-hand panel shows issuance of euro-denominated green bonds is also strong among non-euro area residents, who accounted for almost 30% of total euro-denominated green bond issuance in 2019. This suggests that the euro is also attractive for foreign issuers who want to issue green bonds, and that's kind of perhaps a promising avenue to strengthen the international role of the euro in the coming years. Because the euro is already the main currency for issuance of green bonds, the consolidation of the EU role as a global hub for green finance could even strengthen the euro as a currency of choice for sustainable finance and bolster its international role. I've got to hand back to Hans-Joachim.
Okay, thank you very much, Peter. This is a textbook slide on the determinants of an international currency, and I use it just to link it later to the policies. So we see here the key determinants of an international currency: economic size, economic, financial, political stability, sound institutions, financial openness, the liquidity depth of the financial markets, efficient infrastructures for payment settlements. We also have seen some research by Barry and others who showed that geopolitical outreach of the US has helped encouraging the use of the US dollar. And of course, once you have a international currency status, inertia and network effects. And indeed, it is, when we look at the determinants, puzzling that the US dollar role remains so dominant. When you see here on the left-hand side the share of the US in the global economy, the blue line, you see it has constantly gone down over time, but the share in the foreign exchange reserves has hardly fallen since the 1960s. And you see also in terms of stability, the US government debt has risen a lot more than in the euro area, and the gap seems to be widening even more after COVID. It is clear the main argument in favor of the US dollar remains the depth and the liquidity of the US dollar market. You see here the amount outstanding of central government debt securities. You see the US dollar market has a volume of around 20 trillion. The euro area market is fragmented. The ratings differ across countries. The total size is smaller, so it cannot compete here with the US. And the next slide puts these things in together. And I mean, of course, it raises the question: why has Europe not managed to get a larger share? And just to remind you, in the SDI, Europe has a share of 30%, which may be closer to its role in the global economy. Now, what are relevant policies to support the international role? And I list here those which we deem most important. I mean, price stability, financial stability certainly are assets. Sound fiscal and structural policies are needed. Marco already referred to a deepening of monetary union, banking union, but we also need capital markets union. We probably need more common debt issuance, common safe assets. We have now provided some liquidity lines to some countries to sort of provide a safety net for other central banks who are using euro in their countries. And we have a number of initiatives on markets and payments. And I will now go in the next few slides through all these policy areas, or through most of them, and add a few more details. So when it goes about resilience of the euro area, I would say, of course, the first thing is to reduce the vulnerabilities of euro area countries. We still have too many imbalances in the euro area as a whole, and too many vulnerabilities in countries. So we need to continue doing reforms. We need fiscal adjustment, and it's very positive that the plans of the Commission link the planned recovery fund to the European semester guidelines, which ask for such reforms. But national policies which are bringing us more convergence are probably the key. At the same time, I think the international role of the euro should be supported by the recent measures which have been taken in the EU. The Recovery Fund, or as it is officially called, the Next Generation EU, and the short-term safety nets, or the ESM instrument, the EIB, the SURE instrument, they all should help strengthening the euro area resilience and the euro's international role. And as Marco already alluded to, there are two channels which play a role here. One is we increase the credibility of the EU and euro area constitution, so we show that there's a political will to defend the euro. And the second aspect is that it is a debt finance program which creates common assets, and which may be the nucleus of some bigger safe asset in the future. But of course, we know that the European policy agenda is not finished. We have a lot of work still needed on banking union, which I'm listing here at the bottom of the slide, and I will not go through this, but also on economic and monetary union. And particularly here, we need to make the fiscal and structural policy instruments more effective. We also think we should work towards a permanent common fiscal capacity with a stabilization function, and conclude the ESM reform. Now, when it comes to CMU, it is clear CMU is a key aspect to support the international role. We have two aspects to the development of the market and the integration of the market. In the end, we need a truly single, deep, and liquid market. And this requires work along four different work streams, namely the framework conditions need to be converging, if not harmonized, and famous examples are insolvency regimes or certain taxation areas. Harmonization of products, green bonds have been mentioned by Peter, will foster the CMU and also the international role. Harmonization of market supervision regulation, harmonization of market infrastructure. So in this respect, we very much welcome the new report, which was just released by the high-level forum chaired by Thomas Wieser a few days ago. And we very much hope that this gives new impetus to the debate on CMU. And we now look forward to the Commission to make concrete proposals to bring this forward. On the infrastructure side, I think we have already got a rather good infrastructure operated by the Euro system. We have Target 2, we have Target 2 securities, T2S, and we have TIPS, which is an instant payment settlement. We are now working on Target 2 and Target 2 securities consolidation. This will bring us closer to the goal of a truly single financial market. There's also the European payment strategy underway, which should help towards developing pan-European retail payments. All these initiatives will increase the efficiency of the market infrastructure. They will foster market integration, and they will make euro-denominated markets more attractive to foreign market participants. But I also mentioned here at the bottom other aspects which probably play a role in the future, which is global stablecoins and the introduction of central bank digital currencies. When you look at the stablecoin discussion, you have seen that Libra was initially multi-currency proposal with share in the basket of the euro of 18% and the US dollar 50%, so a rather small share of the euro. But now it has moved to a single currency proposal, so you can also have Libra in US dollar or Libra in euro. And of course, we need to see how it develops, and I wouldn't rule out that transactions in US dollar will be more attractive than in euro, because it will be difficult to make the euro transactions profitable as long as we have negative interest rates. So this could be the development of Libra could affect the role of various currencies. The same is with CBDC, and CBDC that we may see a particular first mover advantage, that a central bank who introduces CBDC first may see some increased international use of its currency, provided it allows such international use. But these are open questions and probably the most exciting issues in the near future for the central banks. Now, on the monetary policy side, I show here a slide which compares in blue our assessment of benefits and costs of a stronger international role of the euro with an assessment which we would do now. Now, if I start with the blue part, you see in 1999, our main benefits we were seeing were seniorage for the central bank, low transaction and hedging costs, and the exorbitant privilege linked to lower external financing costs. But we stressed at the time a lot the risks to monetary aggregate signals and capital flow volatility. And at the time, we took a rather neutral stance, not fostering the international role. I think today we would put some question marks on some of the costs which we had identified at the time, particularly on monetary aggregates and capital flows, while stressing some advantages more, and that you see on the red part, namely that we have an international currency that just gives us more monetary policy autonomy. It has a better shield against foreign shocks, and it should also have a stronger international transmission of monetary policy with positive spillbacks. We also, however, should realize one aspect which is new in the debate since 1999, that the exorbitant duty has become more transparent, and Marco also alluded to this. If you are the main safe haven in the world, you may suffer from a stronger exchange rate if there's a global crisis. We have seen this in Lehman, and we have seen this now, that there's flight to safety, strong demand for US dollar, precautionary hoardings of US dollars, for example, for trade financing, putting a lot of pressure on the domestic currency at the time when you don't really want it. We also, and this is new in this episode, have seen that the dominant currency status can lead to asset fire sales in global stress episodes. There was so much demand for US dollar cash that several foreign central banks had to sell their treasuries, treasury bills and securities rather abruptly, which then led the Fed to introduce liquidity backstop facilities for the foreign central banks in terms of swaps and the new FEMA facility, which reduces the need for foreign central banks to sell securities on the market and to obtain dollar liquidity at short notice. So this is certainly an aspect which has to be taken into consideration when you become a more dominant currency. What you see below is the lower pass-through reduces impact of FX shocks and CPI and lower effects of monetary policy on import prices. These are two additional aspects on which more work has been done in the last 20 years. There are pros and cons clearly in this, but I would think the emphasis on greater monetary policy autonomy and the stronger international transmission should outweigh the costs of this. And finally, but this is not strictly a monetary policy aspect, we have reduced exposure to unilateral decisions from third countries. I mean, the famous extraterritorial application of US sanctions of businesses linked to US dollar. This has triggered a lot of political debate in Europe. So overall, as you can see from these slides, our assessment is much more positive now on the international role than it was 20 years ago. So that already leads me to the conclusion. And I just summarize here what I already said. The key reason why the euro hasn't developed is the lack of market doubts about the resilience of the euro area. This requires, first of all, sound policies in the individual countries, but it also requires a deeper economic and monetary union and more complete capital markets union in order to support the international role. It's clear that we would have been less vulnerable to the COVID shock if reforms had taken place before. So COVID underscores the urgencies of these policies and reform efforts. But as Marco, I would be positive on the reaction of the EU to the COVID crisis. The recovery fund, short-term safety nets have helped. And I should also stress, I think the ECB reaction should have helped removing market doubts about the future of the euro. We have taken exceptional measures. We have dealt with euro liquidity needs in the euro area, but also internationally through the provision of swap and repo lines. So in that respect, I think the European policy reaction should support the international role of the euro. Whether it will strengthen it, we have to see. I mean, we have also a strong policy reaction on the other side of the Atlantic. So the jury will be out in the coming years whether the long run will be better for the euro. But I would agree with Marco that if the recovery fund is implemented in the way it is proposed by the Commission, this would be a strong asset.
Thank you very much for this report, which is, by the way, as you stressed, Hans-Joachim, maybe more positive than some before. I would like to begin with two preliminary remarks. The first one is that we are living now in a very changing world, in a fast-changing world. We don't know where we are exactly. We don't know how we will get out of this crisis, if it was just a first wave. So we have all to be very prudent, but at the same time, it obliges us to be a little bit more creative and stop making what I would call a copy-paste thinking. So the American model is great, but Hamilton was active at the end of the 18th century. There were no financial markets, no central banks as we know them. So we have to define what kind of role we want for the euro from our own perspective. Second remark, for many people and managers in companies, this discussion could seem a little bit abstract. They are just worried that they could lose their jobs and they don't know what the recovery will be. So once again, let's try to be humble and to get them on board by, how can I say, we have to make the case in a very pragmatic way. So I will give a policy point of view because I was asked to do this. I will mix a little bit, of course, the position of the Banque de France, but with my previous experiences at the European Parliament and as a defense minister. Well, why does it matter for, once again, the workers and the managers who are now struggling for life? Why does it matter that we strengthen the euro and that we provide some more international influence? Well, I must confess that sometimes I'm surprised when people say, well, we have not reached the goal of being as strong as the dollar, but we did not even try, to be honest. And maybe it was wise for the 21st years of our young and genuine currency without a state, not to pretend to be as strong and as assertive as the Americans. So the good news is that we are here to stay. Many people worldwide were quite skeptical when the euro was launched, and then the financial crisis and the euro area sovereign debt made many people nervous about what will happen. So my main message is we are here to stay. The euro will remain. It's a political maybe strange animal, but the last decisions taken by France, Germany, the whole program prepared by the Commission, I hope with all member states, because all this is decided with unanimity, can help us to be there. So there were good reasons in the past to try to get a more assertive role worldwide, but there are new ones, and I will focus on that with the crisis. I will take two examples. The first one is financial stability. Look at the Financial Stability Board report at the end of March. What does it show? Really, we were in the midst of the turmoil, and what was the message of the Financial Stability Board? The message was that there is a huge reliance on US debt, which represents the double of the Japanese or the addition of the European one. And here, of course, it means that lots of people are putting their money in the US, buying treasuries, etc., which is fine in the current situation, but maybe a larger choice of investment would not be bad. And these reports shows also the capital outflows from emerging markets economy. It was more violent in March than it was in 2008 during the great financial crisis, or even the moment of the taper tantrum in May 2013. So we had a very active intervention of the Fed. They provided swap lines, they provided repos in exchanges of treasury, so they did the job, and well, no doubt. But we have to look at it a little bit from a global financial stability perspective. One point which is very important for the Banque de France and for me, I must say, are all the climate-related risks. You mentioned, Hans-Joachim, the fact that the euro was the first currency for the issuance of green bonds. And I would quite say, like George Clooney, what else in the future? Who is going to buy brown bonds in the future? Where are the perspective for an economy that is not coping with climate change? So we have tried in Europe with many global partners now, with the network for greening the financial system that was created by the Banque de France, the Bank of England, the BUBA, the Americans, Singapore, Mexico, etc. We were 8 a little bit more than 2 years ago. We are now 66 supervisors and central bankers worldwide. But we are very proud that we can take the lead in green finance. At least it's the way we look at the future of financial markets from a European perspective. It's the slide 12 of Hans-Joachim's presentation. The second reason why we should do our best to increase the role of the euro is that we pay a price for being only the second. Once again, the goal is not just to be first, but there are geopolitical costs. I don't want to comment too much, but look at what happened on Iran. The US were free to withdraw from an agreement, but some other countries were forced, at least the companies were forced to accept something that was unilaterally decided. Nobody knows exactly what is going to happen worldwide with trade. Maybe we will go back to the trade we knew before the COVID crisis. Maybe not. And there is a certain mood, I would call it the take back control mood. for medicines, for masks, for many sanitary items, but maybe it will have an influence on the way the trade is functioning in the future. I hope the WTO could be, how can I say, more active to have a global vision of trade. But in any case, the European Union being a global strong trade partner could benefit from a currency that is backing these. On the how, I will just, and Marco will be happy, I will just refer to Jean-Claude Juncker's State of the Union speech in 2018. Many ideas are very well developed in this speech and in the communication made by the European Commission at the end of 2018. I will be very brief. There are two aspects. One are the internal measures. They were already mentioned. I can be quick. The capital market unions, the fact that we need infrastructures, we need benchmarks. So what we need is not only, the nice side and the sexy thing, it's also plumbing. And you mentioned, Hans-Joachim, Target 2 and TIPS and the payment systems and all the infrastructures you really need to be strong and sovereign, independent in the way you look at it. Of course, Brexit is going to play a role as well, because we were not only a currency without a state, we were a currency without a financial place, a financial market within its borders. If I look at the euro area, at least it was in the European Union, in the legal framework of the Union, it was fine. Now we are going to invent, we are obliged to invent something else. Of course, Marco mentioned it, Hans-Joachim mentioned it, the safe asset, the fact that we need a deep market, a deep liquid market, and here we have a quantum leap with the proposal of the Commission. But I insist on all the efforts made by the European Commission and some states like France, because of the Paris Agreement, on the greening, how you develop the instruments you need to greening in order to green finance, with the taxonomy, the disclosure rules, etc. Here, the strategic review of the ECB could also be a game changer from a monetary policy point of view on the collateral and many aspects. And the very last point, because it's something dear to my heart, it's the external representation of the Eurozone. This is something that is very often not mentioned. I was in charge of a report, an initiative report, when I was at the European Parliament in 2016. We have to ask ourselves if it's normal that we adopt rules together with the ordinary legislative procedure, for example, banking requirements or solvency rules for insurance companies, but we have no representative to defend these rules worldwide. Then we have a certain number of course, very active and committed national central bankers or ministers, but maybe we should ask ourselves if it's the best way to defend our interests. In all the standard setting bodies, you have a very different approach, from IOSCO to Basel Committee to the IMF, the OECD. You have so many places where Europe and the euro area are represented in a different way. So I conclude, sometimes we preach multilateralism in Europe. Sometimes we are active and we do it. So we have to be humble. We should not preach the others. We should come with results. So the best thing we could write on the euro is just do it. Thank you.
Many thanks, Sylvie. Now I think you added to the picture that was already pretty broad, superimposing a policy and also a political dimension. We shift now to Barry Eichengreen. I can see you have some slides and you bring the global perspective into this. Barry, you have the floor.
Thank you, Marco, and good morning. The question I'd like to start with is whether this is a glass half full or a glass half empty report. I was, you see if I can actually go forward here. I cannot make my slide deck. There we go. So, the language in the report is that the euro's international role remained broadly stable. And the question is whether this is a positive assessment or ECB speak for lack of progress, and I think it's both, of course. As we've heard, Euro has once again put misplaced existential doubts about the single currency to rest. The Euro is not going anywhere. It's not going away, but neither is the Euro closing the gap vis-a-vis the dollar, catching up with the dollar in this internationalization space. That's another meaning of not going anywhere. I'm sympathetic, broadly speaking, to the analytical framework of the report. When I talk about this subject, I talk about the secret sauce that makes for international currency status, and I emphasize four ingredients: size, stability, liquidity, and security, all four of which we've in fact heard about in the earlier presentation. When I look at this slide, I see the size, the stability, and the liquidity. And what is striking, of course, is that the Euro area is not very far behind the United States on any of these dimensions. It's much further behind in terms of actual international use than it is in terms of the immediate determinants, supposed determinants of actual international use. So this would appear to point to something else that is important for the Euro not closing the gap vis-a-vis the dollar. It may be inertia, it may be incumbency status, it may be geopolitics, which are not in this particular table. I would lay attach considerable importance to the geopolitics in this article with actually with a couple of ECB co-authors. We demonstrate that countries that rely on the United States for their security umbrella, that rely on the United States for their nuclear umbrella, Japan, South Korea, a few others, hold a larger share of their reserves in dollars than their trade with the United States, than their investment in and with the United States would lead one to predict. These geopolitical alliances, both currently and historically, when you look at alliances past, play a role in international currency status as well. And we know that there are complementarities between different international functions of a currency. If you hold reserves in a currency, you will be more inclined to let your banks do cross-border business in that currency, and so forth and so on. The question becomes, does the European Union need a foreign policy? The Euro area is not an appropriate entity, I suppose, to have a foreign policy, but the EU presumably is, and that's an issue that's kind of fallen by the wayside, I think, in the midst of these multiple crises that we're dealing with. The flip side of the coin is whether the fraying of U.S. alliances, security alliances, will threaten the dollar's exorbitant privilege, undermine the extent to which the dollar is used internationally. So I got up this morning and I saw a Reuters report from yesterday where Donald Trump confirmed plans to withdraw 9,500 U.S. troops from Germany in spite over his G7 summit or German contributions to NATO or something. So there, again, those are actions, I think, that have implications. Let's see. So do things look differently post-COVID? COVID changes everything, and I think it does change the international monetary landscape. In the short run, the COVID crisis has been strongly dollar positive in all senses of the world. The dollar appreciated initially back in March. International reliance on dollar liquidity intensified as well. Previous commentators have emphasized the singular importance of liquid markets, of liquidity for an international currency, and that point was highlighted by the early stages of the crisis. The dollar's status as a safe haven was highlighted, and here I think there is scope for some interesting discussion. I generally regard this as a plus, that the dollar appreciates in bad times. It appreciates in crises. When we caused Lehman Brothers, the dollar appreciated. And I viewed that as the U.S. enjoying kind of an insurance policy against bad things happening. But we heard in the presentation the opposite, that now is not the time when countries particularly want a strong currency. So maybe the U.S. is paying a price for its exorbitant privilege. That's a reminder, I believe, that this is a different kind of crisis than we've seen in the past. It didn't start in the financial sector. Normally, having funds flow into your financial markets is a good thing in a financial crisis. But this is first and foremost a non-financial crisis, although it's a crisis that's going to evolve as we move forward. So maybe this insurance aspect will become valuable again. The Fed has done all kinds of things, as we've heard: swaps, repos, sweetened terms for foreign central banks, all of which have helped to solidify the dollar's position in the short run. The ECB, of course, did the same for Romania, Bulgaria, Croatia, and Denmark, but not for the Bank of Japan, not for Mexico, Brazil, South Korea, Singapore. Here I think this raises the question of whether the euro is moving toward being an international currency or being a regional currency, toward being the international currency for its neighborhood. That's what the swap network of the ECB kind of suggests. We already see some signs of foreign central banks hedging their bets. As Sylvie said, maybe this is a reminder that you don't want all your monetary and financial eggs in one basket. So this figure comes from my friends at BCA, the big Canadian consultancy. Beware, they put rather different scales for the two series on the left and the right. So this creates the impression of diversification away from the dollar big time, where mainly into smaller subsidiary currencies, but it creates an exaggerated picture. There's also the fact of some rather crazy statements coming out of the U.S. Congress. So if you missed Senator Lindsey Graham back in April saying maybe to punish the Chinese, the U.S. ought to stop paying interest on Treasury securities held by the PBOC, those are not the kind of statements well designed to enhance confidence in the dollar. If the U.S. manages the COVID crisis poorly, which it is, that will lead to a loss of the dollar's confidence premium. And I do seriously worry about the erosion of U.S. democracy, about the weakening of checks and balances. We're going to have an election in November that will have to demonstrate its integrity in order to convince foreign investors that the United States remains a serious country. Finally, there is Europe's Hamiltonian moment, and the question of whether it really is a Hamiltonian moment or not. an exceptional one-time initiative undertaken in response to exceptional, unique events, or is it an important precedent? Is it another step along the road toward creating those Euro area-wide assets? In my view, what was important in what Hamilton did was he created the U.S. Customs Service and a dedicated source of federal government revenues, where the federal government didn't have to ask the state's permission to get the revenues to service the debt that it issued. Will there be a dedicated source of finance for these new euro-denominated assets? In my view, that will tell the tale. Thank you.
Thank you very much, Barry. I mean, maybe just one point that has not been, in my view, sufficiently mentioned in our in the comments in the presentation is, again, compared to the financial crisis, the potential for a shift in the policy mix. So much more balanced this time round compared to the ECB being the only game in town for most of the past 10 or 12 years. And I think this is an issue which is important because it outlines also the fact that the euro area is betting more for getting out of the crisis on domestic sources of growth and domestic demand rather than on external demand, which obviously makes it more vulnerable, especially in the present environment. And the fact that there has been this change of attitude, at least allegedly, in Germany towards a more favorable view on fiscal policy in the response to the crisis, I think is an element which, at least also from the market viewpoint, is seen as the euro area finding more cohesion, and also from the political viewpoint being more stable than it has been, I think, in the past. So this is an additional dimension which I think is relevant in assessing the future role of the euro and the kind of confidence that also markets, investors have in the euro. And let me give the floor to the two initial speakers, so Hans-Joachim and Peter, for some reactions to what you have heard.
Yeah, thank you very much, Marco, Sylvie, and Barry. I would say, first of all, I mean, I'm in full agreement with the comments I have heard. I think I can make two remarks. One is just to underline again. I don't think we can just create an international role if we want it. I think the key issue is to have the right policies, and the list of policies which I listed, which Sylvie listed, and also the additional ones added by Barry, are the key issues. And they are desirable policies probably in themselves. And I would see always the role of the euro and the outcome of this process, because in the end we have to influence market actors and market decisions. And the second, and I think that it was also a question which was just came in writing from someone on swaps and repos. I mean, first, perhaps to clarify, the ECB has agreed swaps with all the G10 central banks. So we have a network of swaps with Japan, Canada, UK, Switzerland, and so there are also some non-EU countries there. But of course, it's a multilateral swap network. But essentially, what we see is there's need for US dollar. I mean, you don't see the need for euro in large parts of the world, and a country like Brazil, I understand that they ask the Fed, but they may not need euro in Brazil. I mean, we have been receiving a number of requests. We are still looking at many of them, so we haven't reached the end of our discussions. As I stressed in my presentation, and it was also stressed by Fabio Panetta, one of our board members, just in an op-ed in the Financial Times, it's clearly useful to have a safety net provided by the issuing central bank of an international currency, so that those who want to use euro know that they can also have euro in times of crisis. And this swap and repos we have agreed so far help in this respect. But we should be aware. I mean, the US dollar is much more used internationally, so the Fed gets much more requests than we do.
Yeah, there was a question actually by Ernest on the renminbi, prospects for the renminbi as international currency. We have seen some graphs. I think you have presented. I think both Barry and Hans-Joachim and Peter before, showing that the creeping up of other currencies, including, I guess, the renminbi behind there. I know that within the BRICS there has been talks and moves for increasing the use of each other currency, and the renminbi in particular. So this is a question on the potential global role of the renminbi given China's rising economic power globally.
It's a very peculiar status quo where China is the single most important trading country in the world, and its currency accounts for 2% of funds cleared through SWIFT. The PBOC will be the first major central bank to issue a central bank digital currency, and that brings us to the question of whether that will make a difference or not. There was an interesting report a few days ago about how merchants in South Korea are accepting payment from their Chinese customers through Alipay, the big private label digital platform. And the question they were asked was, would you be even more enthusiastic about accepting payment through CBDC? And the answer was no, given events in Hong Kong, that people are concerned that that unit will have an ID built into it and come packaged with a surveillance technology. So the question was, what is holding the renminbi back? And my answer whenever I go to China and talk about this is every first-class international currency in history has been the currency of a political democracy or republic, where there are checks on the arbitrary action of the executive. And that clearly will hold the renminbi back.
There is a very long question, actually, that let me quickly read it to you. Listening to all this and following the Northern EU and Southern EU members' argument, it seems that all current solution will need to be guaranteed by the people of the EU, and that is the issue in, let's say, the Netherlands, Germany, Sweden, etc. But we have the solution to solve the current European challenge. Our solution does not require government guarantees, and it does not need the taxpayer guarantee. It's a public sector guided, private sector financed 21st century Brady bond-like.
I do think that building on the discussion we had earlier of green bonds, another way to enhance the attraction of euro-denominated bonds globally is to festoon them with some attractive, innovative procedures. Is now not the time for GDP index bonds?
Yes, and I think this is definitely something that comes up and goes very regularly. It does seem to pick up in financial markets in a meaningful way, but I think as in the case of the green bonds, I mean, there is, I think, potential future for that.
No, I think we should not permanently go back to the north-south divide. I mean, for me, either we manage to create ownership of the euro area, and to be honest, the central banks are doing their parts right now, the ECB and the whole euro system, to prevent fragmentation, to face the crisis. So we are spending a lot of energy and money for that. If we are not capable of putting an end to this internal debate, we are on the Austrian website, Nabelschau. We look at ourselves and we are just worried with our own internal discussions. If we cannot get out of that, of course, we will not play an international role. The key question in the Hamilton way of doing things was to think as a whole. And as Barry rightly said, underlying the need for some own resources, etc. And here, in my opinion, we should also stop not seeing some very political elements. Look at the last member states that joined the euro. You have the Baltic states. And here you're perfectly right, Barry, there is a military dimension, and until now, we are all under the umbrella of the US, etc. But if you discuss with people from the Baltic states, the very deep reason why they joined the euro was that they wanted to be on board of a political project. So we are much too much focusing on internal disagreement, and we don't see the big picture that we have part of the former UdSSR that joined the euro area. Thank you.
I couldn't agree more, Sylvie, with this, north-south divide has been extremely damaging. I have to say that one of the glimpses of hope that we have, I believe, in the current crisis is that, unlike the financial crisis, this is clearly seen as, an exogenous element, an exogenous shock where there is no or very little moral hazard implications. And this, I think, will help to have a common narrative and will help to have a more cohesive policy response I think, overcoming this divide, which is, I think, the creditors and debtor divide, which is, I think, the most pernicious one in Europe and the Eurozone in particular. And I think there is one element which is important, is that I think there is increasing awareness that the losers of today or of the recent past are not necessarily the losers of tomorrow, and vice versa. So if we move into a more fragmented global governance and global system, I think countries relying much more on domestic demand, I think, will be better off than other countries. So I think this should help to steer the policy response in the present crisis in a much more effective way than in the previous one. There was a question on the fact that what we have discussed is actually policies for domestic purposes. What policies do you see which instead are specific that could be put in place to enhance the international role of the euro? I think we have in the European Commission some work on that front, but maybe I can put it to the speakers. How significant for the relative roles of the dollar and the euro you view in a less open international regime that seems to be emerging in some countries? Has the EC, together with the ECB, the intention to or the possible intention to use the status of the euro in the future support, spread and enforcement of European value like human rights, free speech in the world internationally, and similarly to the way the US administration is using the dollar for geopolitical aims? Okay, Sylvie, why don't you start, especially on maybe on the final one on exporting European values.
I think we should believe ourselves much more in the values we are supposed to defend. I really believe that democracy matters, that to build trust, a long-term perspective matters. I will take a provocative example. The ever closer union is not just something for federalists, it's the fact that you tell to companies and citizens that they can invest in the single market and that it is supposed to stay. So this is typically the kind of thing we should respect. We should provide stability, provide cooperative values, and I hope that the long tradition of the U.S. on this side will be as active as possible in the future, to put it in a diplomatic way. We absolutely need more cooperative action, whomever is first, second, etc. My second point is on China. Of course, we should not look just at dollar and euro, but look at the world as it is, with emerging very dynamic economies. So maybe tomorrow we will have to cope with some other currencies, successful. Maybe it will be good for stability, maybe not if we don't have very transparent countries behind. So I'm sure the glass is, of course, not full. This is clear. But the place we want to go is more important than just being first or second. We have many values to defend in common with the US, and by the way, also market economy. Because right now, I'm quite worried when I see that the states are paying the wages in the companies, that they are investing directly, that we have suspended all the stated rules, etc. So I really believe that we need to go back to a normal situation in which all the values we have been fighting for since the Second World War remain at the top of the agenda.
Yes, as I said before, I think foreign policy and international currency status go together, and I presume that the foundations of EU foreign policy are democracy, human rights, climate change mitigation, and insofar as the EU remains a global champion along those dimensions, that will help to enhance the Euro's international role, because the EU will be cultivating partners. On the implications of deglobalization, it really depends why and who deglobalizes. So there is a scenario in which everybody pulls back from globalization and tries to become more self-sufficient. Less globalization means less need for global liquidity, which means a diminished role for the euro and for the dollar. There's another scenario that's been politely alluded to, where the U.S. undermines global institutions and continues to withdraw from the WTO and the WHO and every other organization whose name begins with a W. That scenario would be rather Euro positive, because again, the U.S. wouldn't be a committed stakeholder in globalization. It wouldn't be viewed as a reliable partner.
I can perhaps comment on the question of specific policies. I mean, we have seen attempts in the past, early by Japan, later by China, to really foster the international role of their currencies by specific policies. But we have also seen they very fast reach limits. I mean, China has the biggest network of swaps in the world, but the role of the renminbi in the global economy is not dramatically rising. I don't think you can force it. In the end, you need the fundamentals right. China needs open markets. It needs functioning markets. Investors must. I mean, it's no comparison investing in China to investing in the US at present. And the second point, just to finalize on the implication of less openness. I think you see it also in our report. Of course, the policies of the US administrations have led to also partly political reactions in some countries of the world which are hit by these policies. So we noticed that particularly China and Russia have reduced their holdings of US dollars in the last year. So policies which are confrontational or work towards less openness also lead to reactions. That's it. Thank you very much, Marco.
Thank you very much. I think we had I think a rich debate, very broad ranging, and it is clear though that I mean one of the main messages here is that to be strong outside, we need to be strong and cohesive inside. There is not, for the international role of the euro, a simple economic and financial fix. There is also a political economy and a sheer political dimension which enters into the picture. We have looked at the let's say demand, supply side of the euro. So how and what we need to do to make the euro more attractive internationally. In the kind of reforms which would underpin domestic strength, but also have an outside positive spillover. What I can certainly say from my own experience over the past many years in the G20, in the G7, is that there is a huge potential and huge demand for Europe out there in the world. It's not only emerging economies, it's not only even very large like India, but also emerged economies, advanced economies like take Australia or take South Korea, who would be very, very uncomfortable being sandwiched in a G1+1 world. So the opportunities for Euro to play a more, I think, relevant role and using the euro for that and benefiting the euro for that, I think, are there in a huge. I mean, I go back to what I said at the beginning. I think the Europe will remain a continent coming from Venus, but we can have, let's say, Venus with a sword and not only armless. So with this, I give the floor to Ernest for maybe final communication. Thank you all.
With this, I close the webinar. Thanks to all of you for participating so actively, and I wish you a nice evening. Bye-bye.
Servus. Danke.
Bye-bye.
Okay.
Bye-bye. Bye,
Bye-bye.
Barry. Bye.
Bye.
Cheers. Thank you.